Hello, I'm Carolyn Monahan, Director of Marketing and Communications for the West Coast Chamber. In today's member question, we're talking about the Employee Retention Tax Credit, which can greatly help businesses that suffered revenue reductions from COVID-19. So the ERTC was originally included in the CARES Act, but it wasn't widely used initially because businesses could only take advantage of either the PPP or the ERTC. But Congress has revised this, and that means many more companies can now qualify. So I have brought in today Randy Kaltenmark, who is a partner with Barnes and Thornburg, who's going to talk us through these revisions to the Employee Retention Tax Credit and hopefully make it something that's easier for our members to understand. Thanks for being here, Randy.
Thanks, Carolyn. Appreciate the opportunity.
We know there was an ERTC. What has changed?
Well, good question. I think as you alluded to in your introduction, Congress has seen fit to expand both the length of the credit term as well as its availability and ease its qualification requirements, all of which make it more accessible to a lot of businesses and taxpayers. So it's a good thing. In particular, for example, on the availability of the credit, the credit originally ran for qualified wages paid from March 21 of last year through the end of the year. But now Congress has extended it through the first 2 quarters of 2021. So it would include wages paid up until July 1 of 2021. So it is a significant expansion on term or length of the credit.
What is the eligibility period now?
Yeah, so that's going to run in total. It's going to run from March 12, qualified wages paid from March 12, 2020 up until July 1 of 2021.
So I know that the amount of the credit has changed. You talk to us a little bit about what it is now?
So the amount of the credit changed. Originally, when it was enacted, it was 50% of qualified wages paid. But now for wages paid for the first 2 quarters of 2021, it's going to be 70% qualified wages. So a bigger potential wage pool to work from.
Is there a maximum amount?
Well, that's right. So the original credit was capped at it ended up being a $5,000 maximum for all qualified wages paid through 2020. But now for 2021, for the 2 quarters during the extension period, we're talking $7,000 of qualified wages for each of those quarters. So for the 2 quarters combined, it's going to be $14,000. So the cap really got increased significantly compared to the original.
That is a huge change. What are the eligibility requirements for the credit?
The eligibility requirements, if you recall, the original requirements were either that your business operations had to be fully or partially suspended due to a COVID-19 lockdown order of some sort. And there was some question as to what those orders encompass, but I think the expectation was they'd be kind of liberally construed. And the other potential way a business could qualify is if for any quarter in 2020 they had gross receipts that were less than half of what those receipts were for the same quarter in 2019. First element under the new law, the first way you could qualify, the lockdown order, hasn't changed. It's really the second element or potential eligibility requirement. Instead of being 50% of gross receipts, it's now 20% of gross receipts. So you don't have to have as significant a decline in gross receipts in order to qualify as you would have had under the original law.
Does this eligibility change depending on whether the employees are working or not?
Yes, Carolyn, it does actually. Under the old law, there was a 100 employee threshold that said if you were under the threshold, it didn't matter whether you were claiming the credit on wages paid to employees working or not working. But if you were over 100 employees, then the qualified wages in question had to be paid to employees who were not working. The new law, effective January 1st of 2021, changed this threshold so that it's now a 500 employee threshold, so that for the first 2 quarters of 2021, if you're an employer with 500 or fewer employees, you're eligible to claim the credit with respect to wages paid to those employees, regardless of whether they're working or not. By allowing employers to include wages for employees who are working, they've really expanded the scope of the credit. So that's going to be a big benefit to employers who are under the 500 employee threshold.
Which a lot of our members are fit into
Yeah,
that small business category. So that's
right,
great
right.
information. Do employers qualify for the credit if they have received PPP loans? Is this something that's different?
It is different. Historically, the answer was no. So if an employer received a PPP loan or they had an affiliate with whom they enjoyed more than the 50% relationship, got a PPP loan, then they couldn't qualify for the credit. They weren't eligible for the credit. The law has now been amended to say that such taxpayers are no longer prohibited from claiming the credit. It's just that they can now claim the credit on the excess over and above the amount of the PPP loan proceeds they use to pay wages. So there's still no double dipping,
Okay.
but instead of being outright prohibition, you get to claim the credit with respect to the excess over and above the PPP loan. So that's an added benefit. And in fact, that change was made retroactive back to qualified wages paid as of March 12th, 2020. So certain companies may have a refund opportunity with respect to the credit if they can claim the credit for the excess for prior periods. So there's an opportunity here that taxpayers may want to take a look at to see if they qualify.
May employers get an advance payment of this credit?
Under the old law, that was not the case, but they've changed that now to provide that to the extent an employer is eligible and otherwise qualifies, then they can get advance payments of the credit. We don't know yet how this is going to work. The Treasury Department, working with the Internal Revenue Service, is going to issue some guidance here shortly, I would expect, to detail the mechanics on how the advance will work. But generally, you should be able to get an advance rather than having to wait to file your quarterly payroll tax returns and get it then. So that's another benefit to taxpayers as well.
Seems to me that being in close contact with your payroll provider or your accountant is a really good recommendation.
Absolutely. For sure, taxpayers want to coordinate with either their payroll service provider as well as their accountants or other tax professionals to make sure they're getting the full benefit.
How late do you have to stay up every night studying all these new things?
Well, it wasn't quite as bad as it was when it all came out in March of last year. Now it's really just a question of what changed and why and how does it affect me.
Appreciate you taking the time to spend with us today and talk us through this.
I'm glad to be here.